Good morning, everyone, and welcome to the European crossover webinar. And it sounds like a funny story, but true. I can't find my glasses. I've been looking and looking. This is crazy. It's just like they up and ran away or something. But we're going to move on without it. And I guess I'll just have to press my face closer to the monitor. I've been looking all around. I can't find them. So we saw a pretty big move yesterday, and surprisingly, indices came back, and actually they pushed even a little bit higher in the Asian session before. Now we've kind of pushed or rotated a little bit lower here, but quite the move yesterday. A little bit surprised we finished. I thought it looked like we were going to push a little bit lower yesterday. I mean, we came down, as I said, during the Asian session, and then bounced back up a little bit higher, and then we've come back down again. But quite the move once again. Yesterday, we did go in and see some pretty good action overall. We'll go in and take a look real quick for, as I squint my eyes here. And I'm talking about the data for today. So at the top of this hour, we are going to have Eurozone business climate, as well as sentiment numbers out, as well as Italian producer prices. Now, we did have Spanish retail sales, which came in weaker at 3.9%. And then coming into the States, we will have personal income and spending, core PCE, advanced goods. Well, pretty good loaded up day too. And we do have a final read on University of Michigan, as well as Chicago PMI. And bear with me while I go on and pull up this news story. And be honest with you, like I said, it's a bit tough with without my glasses, but here goes. I guess I could have just pushed in my some contacts. But anyway, yen hits new session highs after Abe resignation, dollar weakened by the Fed. The Japanese yen hit session highs versus the dollar on Friday, buoyed by the news that Prime Minister Shinzo Abe will resign, while the dollar dropped after the U.S. Federal Reserve said it would adopt average inflation targeting. Japanese stocks fell and safe haven yen erased some recent losses overnight, though it was reported that Abe, the nation's longest-serving prime minister, will step down due to the worsening health. The yen, which had fallen to two-week lows of 694, rose on the news to be as strong as 602 if it eased slightly to 606. ING strategists wrote a note to clients that Abenomics was one of the key factors in the yen weakness in previous years, but they said what matters most for the yen is the Bank of Japan's stance, and that it's too early to say whether Abe's resignation would materially impact the central bank. Nonetheless, concerns about the post-Abe shift in the policy stance added to our bearish dollar yen outlook, and expect for 102 by year end, though we continue to see dollar weakness as the main driver of the cross. And at the hotly anticipated virtual Jackson Hole conference, Fed Chair Jerome Powell said the U.S. Central Bank would seek to keep inflation at 2% on average. So that, with me. So the periods of too low inflation would likely be followed by an effort to lift inflation above 2% for some time. In practice, market participants expect this means that the current ultra-low rates will stay lower for longer. The dollar fell to as low as 92.418 versus a basket of currencies. Commerce Bank FX analyst, two-line win, wrote to clients that the new strategy turned U.S. monetary policy into a black box, a system whose workings cannot be understood from the outside, as it suggested the Fed was not following any specific formula to determine when to hike rates and could choose the period over which to measure average inflation. Seems to me that the market has not totally grasped the implications of yesterday's monetary policy change for the U.S. currency, she wrote. Of course, the dollar had to take a pummeling already over the past weeks, but I do see further depreciation potential. So with that, we're going to move into the analysis, and bear with me. I don't know where the heck those glasses went. This is the craziest thing. I guess I should have just popped in the context, but I don't even wire them anymore. Okay, let me let's take a look here on the. Tell you what, this is not easy with you squinting your eyes. Take a quick look here with the. So we did see, as I mentioned, and we're looking here with gold. Gold, we'd actually had this resistance here. Somebody asked about gold, and I posted the chart and said, well, we do have resistance at 1986, and that's exactly where it went to, and it rotated lower. I thought we might have maybe done a little bit of an overshoot, but we didn't. We rotated lower, and this turned out to be key support, this, which I showed, the 1922. Now, they took that out on the stops, which that's to be expected. You'll see an overshoot. But they came back, and you see we did go on and see a bit of a bounce back, and we're currently here at 1954. Looking here with the NASDAQ, we're still up here in the clouds. I thought we would have probably seen a little bit further follow through, but that was not to be. I mean, we came back, which wouldn't have been a surprise that we came back, but I thought we probably would have pressed a little bit in this lower area into the close. I would have, would not have expected us to come back and stay up there. But we did see Apple stay, although it had been weaker overall during the session, towards the end of the session, it started pushing up higher. So once again, I guess they decided to, overall stick with that momentum. I could still think that we would have seen a little bit more of a fade, but we didn't. We'll see how today plays out. As we mentioned yesterday, it takes a while to go and turn around a big ocean liner, but still, like a little bit surprised that we finished as strong as we did. I would have expected us to push a little bit lower. Taking a look here in the S&Ps, same thing here, up in the doggone stratosphere. And as we go into the week, you don't really expect on a Friday, when you're looking at a market like this here, all of a sudden for it to just turn around and sell off. Anything's possible, but I would have expected us once again to finish a little bit lower, probably down in here, and then we had the opportunity to go and push lower. And right now, will be interesting to see how we close, but overall, it still looks pretty doggone solid. With that, we'll go on and move into the analysis. Bear with me when I squint my eyes. There we go, and hold on. Okay, here we go. And I practically have my face not too far away from the screen. Look at this turnabout here in the euro. Holy smokes. So the euro completed the session posting a medium-legged doji. You can see right here. And generally we have a medium-legged doji, and after you've had a pretty good run, and really, like I said, it's a long-legged doji as opposed to medium, and this was really more of a medium-legged doji. But still, once again, generally what will happen in a situation like that, you'll see the market, whatever the prevailing trend is, you'll see it dip back for, in this case, dip back somewhat for support. You can see here we come back and made a run up here close into these highs. So that being said, suggesting bulls and nor bears have control. As the prevailing trend has been bullish, this would indicate a likely pullback. Support will be 1739 with resistance at 1876. We can see we're already past the 1876 and we're pressing here right now. We'll just go with the level here, which is going to be this 1902. We could press hard, but we'll see if we hang on at that point. But this is a pretty good solid return here. Probably has some people caught off guard, but nonetheless, we're here. So it's going to be 1902 for support, for resistance. And a moment. And support is going to be, man, this thing is really pressing like nobody's business. Right there at 1834 at this point. So we'll go with the 1902, but it certainly looks like it wants to press even beyond that area here. Pretty good strong move up in here. Let me got two pairs of glasses and I can't find either one of them. Oh, this is ridiculous. Cable close with a similar medium bar with a medium-legged doji as well as a euro. The wick was shorter in comparison, but suggests a test lower for both for new buyers. Support will be 3018 with resistance at 3269. Well, I'm going to just leave it there at 3269, but I'll tell you what, it certainly looks like it wants to press higher than that. We're at 3271, so 3269 for resistance, and we'll take a look at the 2 hour for support. Bear with me. We already had the 3269 ready. We'll take a look on the 2 hour chart. Right here, you can see it coming across this level here. 32. Let's just go in the middle right here. We can see these touches. This is just some kind of a push here. Coming right across this whole level here. You can see this right here. It's going to be 3202. So let's go with 3202. And let's go into the Aussie dollar. Okay, the Aussie closed the session with new highs indicating a challenge to the weekly level of 73.40 with immediate resistance at 73.05. Support will be 72.07. So we're looking at the key weekly level at 73.40. We'll move into that on the weekly chart. And you can see right there, 73.40, and that'll be the resistance. And actually, that level comes in right there. 73.24. So it's going to be 73.24 for the resistance. Boy, this is once again up, up, and away. Support is going to be right there at 72.54. And onto the Kiwi. So the Kiwi continued to push higher after closing above 66.01 on Wednesday. Resistance will be 67.04 with support at 65.53. Well, once again, we're holding up very well and we're pushing a little bit higher and pressing that upper region. So the resistance, not the resistance, but the support will be 65.32. Well, I did push it for 65.53, but let's go with 65.32. And once again, resistance will be we'll just move it up in here. It's going to be right there. Bear with me. Right there. 65.55. 65.55. And on to the dollar CAD. So the dollar CAD continues to slide lower for the third consecutive day. Support will be 30.57 with resistance at 32.17. Well, we can lower that 32.17. So bear with me. Resistance will be right there, 31.75. So the dollar peso woke up with a vengeance. You can see how dead this market had been. And as I mentioned, it wasn't one that I would look at for one that would, I'm trying to look for a better word than a hint, but one that would, suggest, oh, something big is going to happen. But nonetheless, we did see a big move on it. The ones I was focusing on, as I mentioned, were going to be the euro, i.e. cash dollar index, because they trade inversely, but also the Aussie dollar. But nonetheless, like I said, it did get the big move. It did get a very good move nonetheless. But that being said, dollar peso woke up with a vengeance. The pair only took the pair not only took out bias chart resistance at 22.14, but challenged the 22.20 area on Thursday before settling back at 22.14. Resistance will be 22.14 on Friday with support at 22.08. And that 22.20 is just a huge level right there. Look at that come across. It stymied it, but it hung around there for a little while yesterday. Let's go into the dollar yen. The dollar yen tested both sides of the range and stopped at 669, just ahead of the bias chart resistance of 672. Resistance on Friday will be 690. Well, I put 994. I meant to put 694 with support at 631. So we actually came up here. And it stopped right there at 695. Not bad. Hang on. I put 994, but clearly, can't speak. Clearly, it wasn't it to be 994, but 694. So not bad. It took it out by 1 pip. And 631. Right now, we've been as low as 601, and they've pressed the lower side. So we'll just go with the level here. You see that 614? Just go with that. They have overshot it, and maybe we could press lower, but that did contain it. But obviously, the big news was the Abe resignation. So the dollar index posted a nice rally with a medium-legged doji. The index will look to move higher to work off the oversold mode. Resistance will be 93.74. We support at 92.67. Well, we've turned around and reversed things around. You already saw what the euro did or is doing right now, and the dollar index and euro basically trade inversely. We're pushing once again lower here. This does not look good. We're in a support level here, but just like the euro, you almost have to be concerned that maybe we're going to try and blow out those stops. Euro is currently at 1908. So I'm going to go right here with the level right there from that opening, which is 92.21. But man, this is not looking good. This is not looking good at all. We can eventually come down to this 91.97, but for today, I'll put it for 92.21, but wow, this is, the story read, hey, it's a black box. Doesn't look like there's any direction the Fed, which was Lan Wen, Tu Lan Wen was saying, and they expect further I don't want to say deterioration, but basically, a continued further move here with the cash dollar index. But holy smokes, I would have thought that we would have start to see a bit of a bounce. It doesn't help that indices are still even higher, but this is a little bit concerning because, boy, we could really start to extend this even lower here. But we'll go with the 92.21 and resistance is going to be 93.39, but this does not look good at all. With that, we'll go into the cross rates. Pretty good move here in the Kiwi yen, although you can see here it came right into this level. Which is 71.04. Boy, these are 3 good solid days. Look at that. You do go and get a pair back, at least for today. It'll be this level here, which is 70.59. And onto the euro yen. You can see we may run up here, same here, with these yen pairs hitting key levels. Resistance is going to be this level, which is 26.57. And support 25.52. And onto the euro odd. And move down in here, and if you look at the touches coming across, it really doesn't even come in until here for solid, but at least for now, look at the low here. And that confluences with these lows here. I'm talking about the wick. That comes in at 62.49. It overshot it by just a little bit. You did have 62.52, which wasn't too far off. And then resistance would be the 63.40. Would be surprised if it actually made it to that level. Further pullback in the euro kiwi and support, you can see coming right across this level of touches here, which would be 77.52. It's not easy to see with my eyes squinted like this. And on the upside, we're going to go right here, just above this level, but right here on that close, which is 79.10. Onto the Aussie. Another push higher here with the Abe news. but you can see this level coming in here, which is 77.76. And support's going to be 76.47. Which we did have that level. Let's go and move into the guppy. Boy, this is going to turn out to form a nice gravestone doji for right now. Let's go and take a look at resistance. You see the bottom right here, which is the opening here, and that confluences with this wick here. So right there, that one, and that would be 40.97. We did still overshoot it, but actually right there, I'm sorry, it's going to be 41.08. Okay, sorry about that. Squinting these eyes like nobody's business. And support is going to be 39.02. Cone touches here, 39.02. I mean, for today, you're probably looking at around 33, 39.72. We'll go with that just is for today, but I think they'll eventually make a move down here to 38.87. But for today, right now, it's going to be, let's go with 39.74. And lastly, with the sterling odd. Right there, which is going to be 81.01. With resistance right up here at the top of this bar right there, 82.73. And with that, that'll cover the FX, and I'll get the bias chart posted. I'm going to try and do a hunt for 2 missing pairs of glasses. This is pretty crazy. But anyway, nonetheless, thanks for joining us here in the European Crossover webinar, and we will see you in the chat room. Mark asked about levels in the Dow, so I'll go to that real quickly. Sorry, I didn't see your question. Boy, with me squinting my eyes, it's not easy. Hang on, let me get to that. Bear with me. Dow, let's go to here. This is just plain nutso. I mean, we're still so strong. Bear with me. So on the upside, for immediate, and that's what you really need to concern yourself with, because everyone focuses so much on the short term. I mean, with these individual equities, but the upside, you'd be looking right here, which is going to be 28,683. And on the downside, the key level right here is right there, 28,442. 28,442. And on the upside right now, it looks like they may try and challenge, which would be 28,683, 28,683. But the real good solid support comes in right here, 28,442. So I hope that answers it for you. Okay, great. I'm glad you were able to. I'm glad I was able to see your question. Which is actually not an easy thing to do. But anyway, nonetheless, thanks for joining us here in the European crossover webinar, and I'll get the bias chart posted.